Hello and welcome to Share Talk. My name is Charlie Gibson and today my guest is the Chairman and Chief Executive of Thor Mining in, well, it's listed in both London and Australia. Thor has tungsten projects in Australia and also in the United States, and it also has a copper and a little bit of gold project in Australia as well. So Mick, very nice to see you. Thank you very much indeed for joining us.
Thank you, Charlie. Nice to see you in the studio again.
Absolutely. So that's a lot of assets that you have there. Molyhil, Tungsten, Australia, that's your lead asset, isn't it?
It is, Charlie. That's the one that's most ready for production, and if we can knock over the financing job with Molyhil in the next few months, well, we'll be producing tungsten and molybdenum concentrates out of Molyhil in about 18 months' time, or thereabouts. And that's a good thing to do.
So tell us a little bit about you, because you've done a definitive feasibility study. You've announced the results of that relatively recently. Just give us an idea of what that study showed.
Yeah, sure. In the first instance, Charlie, Molyhil, with the ore reserve we have, has a 7-year life. What it also has is an operating cost of, and I'll talk in terms of dollars per kilogram of tungsten because that's easiest to understand, about $9 per kilogram of contained tungsten. Now the current market for tungsten is about $30 per kilogram. This is US dollars. So this puts us very low on the cost curve against the other potential and existing tungsten operators around, and therefore a good place to be. The other thing that is particularly exciting at Molyhil is 30 kilometres away is a whole bunch of outcropping tungsten deposits that I've been trying to get hold of for the last 6 years. Finally managed to sign a deal to get access to the stuff at a place we call Bonya. That is what we believe will turn Molyhil from a 7-year mine life to 12, 15 years or thereabouts, and without a whole bunch of extra capital costs associated with doing it. We know the tungsten's there because it sits out of the ground proud, they outcrop. What we don't have enough of is drilling information to say there's how many tonnes there are and what the grade is exactly. The historical information is good. We've got to go out there and test that, and we will. But that is tremendous upside for Molyhil for what is relatively modest Capex to come up with we believe will end up being a 12, 15-year mine life operation.
You say relatively modest Capex. How much is relatively modest?
We're looking for project finance of about $43 million US dollars, Charlie. Doesn't sound like a lot compared with some mining projects because if you go to some of the big iron ore or copper projects, you're talking hundreds of millions of dollars, but they are much larger. Molyhil is relatively small because it is, while it's quite high grade, you don't need a lot of tungsten to come out of the ground to make money because it's very high value. $30,000 a tonne is what $30 a kilogram works out to be. That's a very high value commodity, and so you can mine at relatively low cost because you're mining lower volumes.
Now humour us here because you're talking US dollars. You'll have to raise money. Are you raising US dollars or are you raising Australian dollars?
Well, the people that will advance money to the project are probably those who will be talking in US dollars.
Okay, so I was going to translate that into Australian, but we don't need to now.
Probably not.
All right, yeah. But we may need to because, of course, you have this London listing. So we may, in due course, need to convert into sterling. But the point is, very high margin project. Now, all right, since we're talking US dollars, what did you say? 43 million?
43 million
US Capex. And then what is the NPV of the project? What's the IRR of the project?
In US dollars and NPV, it's about between 70 and 75 million US dollars for the net present value. Internal rate of return is about 59%, which is a very, very high internal rate of return on this little job.
And just to put that in context, at the moment, Thor's market cap is roughly
about £11 million.
About £11 million, so how,
15 million US dollars.
15 million US. Yeah. So you're trading at about 20% of the NPV of the project, and this is on Molyhil alone.
That is correct.
And this is, if you like, what the investment opportunity is for investors out there.
I think so. I think there's the opportunity as the Molyhil story develops and the source of funding becomes more obvious to the market, that I think people see the opportunity to turn a penny into 10 pence or something of that nature. And with the other projects that we have, they are not unsubstantial. There should be some value in some of those as well.
So you're raising debt and equity for this 43 million US?
I think, Charlie, the forms of finance for tungsten and the molybdenum also, for that matter, in the first instance will come from the people who want the concentrates. There's a heavy reliance around the globe on China for tungsten in particular. It produces 75% of the world's tungsten. There are some people in the Western world who would prefer some of their tungsten came from other sources. And in the past, some of those have assisted prospective miners into production by advancing some money to help out with the Capex, where we hope to be able to do the same. I'm not going to guarantee it, obviously, but that's our first port of call. Similarly, for the molybdenum, there is a bit of a squeeze on the world moly market right now, and the price has gone up quite nicely in the last year or so. There is demand, and there is not a lot of productive capacity able to expand to meet that demand. So we are hopeful that one or two people or players in the moly business who want the moly concentrates to turn it into downstream products will also help us. Yet to be proven, of course, but that's our objective.
Okay, so offtake finance is your primary objective in terms of financing. Then I presume that fairly conventional project debt finance is available as well. And of course, what I'm coming to is do you need any equity?
It'd be foolish to say no. You can't say no. One of the other models, Charlie, is a partial sale of Molyhil into a joint venture, and that would make some of that funding issue remarkably easier. We're open to that and have no issues with that. And there are some players out there in the market who are contemplating that as a potential way forward with us as well. Again, I'm not going to guarantee the outcome, but we don't have a problem with a partial sell down to achieve our objective. It's got to be a good deal for shareholders, otherwise we don't want to contemplate it.
I mean, I suppose that's my point. You would reassure shareholders that one of your primary objectives is not to dilute them excessively.
That's correct. I own 5% of this company. If I dilute the other shareholders, I'm diluting Mick Billing as well, and I don't particularly want to do that. Now, I'm not ruling out some debt, equity issue at some stage. I can't, but we are going to keep this as tight as we possibly can.
Diluted whiskey, a good thing. Diluted Mick Billing, not so good.
Yeah, I'd even prefer not to dilute my whiskey, Charlie, but that's
that's a gentleman speaking for us. Now, we discussed Molyhil, and as I said earlier on in the introduction, that's not your only asset. So what's your second asset? Is it Kapunda or PilotMountain?
I think, I like them both.
Which would you like to talk about first?
Well, let's continue to talk in terms of tungsten, and so we'll move across the to PilotMountain. And
you've just done a scoping study there?
We have indeed, and that says that there's an open cut mine at the desert scheelite deposit that'll last for about 12 years. It will be supported by some relatively modest sized production out of the garnet deposit, which is, while small in size, is quite high grade and therefore quite tasty. The scoping study numbers were done at plus or minus 35%. The engineers who worked on this tried hard to kill it and weren't quite able to succeed. So this says that at the base case, and if you hit it as hard as you can, with all the negative things that you can, it still makes a little bit of money and an okay return on assets. If you are a little bit more optimistic, it does very nicely indeed. And the answer is obviously somewhere in between the two.
So did they give us a figure for Capex?
The estimate, and they're going on models for this sort of project out of a database that sits around the globe that says the Capex for that is probably somewhere between 25 and 30 million US dollars. The reason it's cheaper than, for example, Molyhil is we don't have to put in our own power generation facilities. We don't have to put a camp and an airstrip and fly people in and out in an infrastructure sense, PilotMountain is quite well placed.
It's on the road from Reno to Vegas, is
That's
that right?
correct, yeah. It's about 30 minutes off the road between Reno and Vegas. So
Very wisely positioned on a number of fronts.
Indeed.
And so 25 million, you said Capex, and one's return for that Capex?
Look, at the base case, it makes about 125 million from memory US. At the best case, it makes a bit over 300. But it's but these are numbers that are plus or minus 35%. They're on. They are not something that I would hang my hat on and say this is a bankable number. It's a range.
No, and granted, we accept that it's a scoping study, so it comes with those sorts of that sort of variance, and as you said, it's 35%. Did the study come up with an NPV and IRR?
No, we didn't do that. We didn't factor tax issues in there at this stage, and without tax, an NPV and an IRR is a bit of a joke in my view.
Could an investor, if they wanted to, make some sensible, tax 30%, that sort of thing?
Yeah, I'll leave that to others. We are also quoted on ASX, as you mentioned. They take a pretty dim view of NPVs and IRRs on scoping studies. So they're not particularly keen on us coming out with numbers of that nature. So we produce a range for operating cost per unit and potential revenue, but they get a bit nervous about when we start talking indicative IRRs, etc. And
in terms of timing, if we just done a scoping study, pre-feasibility next year? Bankable year after?
Of that order, Charlie, we're off now doing the second stage of metallurgical test work in China for PilotMountain. We know we can produce saleable concentrates, but what we haven't done is the level of work necessary to define what I would call a costed flow sheet. That's coming out of this next batch of work we're doing. So you could imagine that sometime next year, perhaps towards the back end, we'll have a pre-feasibility study done, which is obviously closer to the mark. We will probably do a little bit more drilling in the garnet deposit because that's an inferred resource at the moment. We'd need to turn that into an indicated resource before we can put an ore reserve around that. That won't be a big, expensive drilling program, but it's something we need to do.
We talked about two of your assets. Quickly on the third, Kapunda, you've done some met test work?
Kapunda, we have done some studies to confirm that we can dissolve the copper in the core. The next stage of work is can we dissolve the copper in the ground from which that core came? And while this thing has ticked all the technical boxes so far, we've got to keep on ticking them to keep it going forward. But so far, we have using a product called glycine rather than the more conventional sulfuric acid. And glycine is an amino acid, very, very benign by comparison with some of the other things that would dissolve copper into gold. Pardon me. We managed to get about a 78% recovery of copper from the core in this particular batch of test work. There's more to come, but what we've got so far is very, very encouraging. I don't expect we'll get 78% recovery in the ground because the conditions are far less controllable than in the lab. But if you start off with something of that nature, you're at a pretty good place to start from.
And you think, given the grade you have there, you can make a project on those sorts of recoveries?
I do indeed. The operating costs for in situ recovery processes is very, very low. You can mine and extract copper, or in the uranium business, it's uranium or it's potash with others.
This is an in situ leach operation
correct.
You're talking
That's
about.
correct.
So you're not actually removing the ore from the ground, are you? No. You're pumping the liquid reagent down, letting it dissolve the whatever metal, in this case copper, that's there, and then you're sucking it up. So it's almost more akin to an oil operation, a very shallow oil operation, than a mining one.
Well, you put in a whole bunch of what we and I'm a farmer's son, a bunch of water bores. You push a solution into the ground in one spot, and that dissolves the copper, and you pump the product out from holes around that injection hole, and then you move on to the next one. And if you've got sufficient and reliable porosity and permeability in the ground between one hole and the next, the dissolved copper will flow through.
Two more things just quickly we need to talk about. We haven't talked about permitting at all. Presumably for Kapunda and PilotMountain it's too early, but for Molyhil you're at that sort of stage. What are the permitting requirements?
There's a whole bunch of them for any mining project, Charlie. We have got sign-off from the Environmental Protection Agency. We don't need to do any more work with that. We've got sign-off with the traditional owners, the Aboriginal community, who have affiliations with the area to do what we need to do and what's in it for them, and that's all covered. The final stage of the permitting process for Molyhil is what is known as a mining management plan. There have been iterations going on between us and the Northern Territory Department of versions of that. When we finally lodge that, we must also lodge it with a bond for the eventual rehabilitation of the site at the end of the job, and that'll be a bond of several $1 million or $2 or $3 million. So we only do that when we've got project finance assured.
And timelines?
I would hope that we get finance in the next few months, probably a little after Christmas rather than before, but I would hope that there are some term sheets that we can talk about before Christmas. Again, I'm not going to underwrite it because that'd be a bit foolish, but I'm hopeful that we can do that, and then sometime early next year the due diligence and all the paperwork can be signed off, and we should then start the development job. And
1 year development
about
timeline?
a year worth of construction come development is the forecast from our engineer. He thinks there might be some measures, some means by which we can shorten that time period down a bit, but let's keep it at a year, because along the line with any construction work you always get bitten somewhere and you get delays anyway. So we're going to stick with a year for the time being.
And so first tungsten early, mid 2020?
That's about right, and that will be a milestone indeed for the company. We've been at this for some time, but it's a project worth doing, and we hope our investors continue to have faith in us. They have so far.
Just finally, I couldn't help notice, talking of investors, share price is off a bit in the last few weeks. What's going on there?
I guess to some extent you can't argue it has dropped. It has dropped more than we would have liked. I think the market during August was a bit quiet and low volumes. That doesn't help. There is a shareholder in Australia who has been almost bloody-mindedly moving out of our stock, and because he wants to do something else. I'm not in a position to mop up his shares because, for example, I'm in a closed period because we've got our annual financials due shortly. So I can't take him out. I thought I had someone else to do with it. It didn't work. He's down to not much left, but he's put a bit of a ceiling on the market over the last few weeks. Hopefully, with him almost out, we'll start to pick up a little bit in the next week or so.
All right, Mick, we'll look forward to that, and we wish you the very best of luck. Come back in early next year, tell us how those term sheets are looking, and keep us updated as to how the project's going. Thank you very much.
Thank you very much, Charlie.
That was Mick Billing, ladies and gentlemen, the Chairman and Chief Executive of Thor Mining. As I said, the share price is off a bit there, but you can still buy it. First of all, that maybe is an opportunity for investors out there. Secondly, it's still up 100% compared to this time last year. So there's a 100% return that existing shareholders already have under their belt, and perhaps there's more for those who are prepared to take the opportunity now. As I say, I'm afraid that's all we got time for. This is me, Charlie Gibson, signing off for Share Talk. We'll look forward to being back with you soon, bringing you more such opportunities, and until then, you have a very capital day.